Hello everyone, welcome back to my channel. Today we will going to learn what is mean by accountancy. So what is accountancy? We will see the simple definition of accountancy given by according to American Accounting Association Chicago. According to American Accounting Association Chicago, accountancy is the art of classifying, analyzing, recording and summarizing at least part of the available financial information for the purpose of passing on the result of these exercises to the business managers and to the management. So what is meant by accountancy? Accountancy is the art of classifying, analyzing, recording and summarizing at least part of the available financial information for the purpose of passing on the result of these exercises to the business managers and to the management. And the other definition of accountancy is, the simple definition of accounting is the method of identifying, arranging and passing on the required financial information to the decision makers in business. So the aims, principles or advantages of accountancy is to know the receipts and payments for the particular period, and ascertainment of profit or loss of a particular period. The financial health of the business concern can be assessed. Getting guidance in business management such as planning, directing and controlling. Maintenance of accurate and complete records for the reference. The main aim of accounting or accountancy is to maintenance of accurate and complete records for the reference. To complete the legal requirement. To find the errors and frauds and minimize errors and frauds. So this is the aims or principles or advantages, we can call it as, of accountancy. So the next question is here, what is account? We will know the simple definition of account. So the account is a summarized statement of debit and credit. There are two parts in an account, which is called, the left hand side is called debit side and the right hand side of the part is called credit side. The account consists of two parts. The account is in T shape like this. The debit side, the left hand side is called debit side and the right hand side is called credit side. And the types of accounts. Now the next thing is, what are the types of accounts? So account can be broadly classified into personal account and impersonal account. So impersonal account can be divided into two parts. So the first one is, we will see what is personal account. So personal account means business organizations has to deal with many individuals and other organizations in the process of their business operations. We'll know the business organizations are there, no? They has to deal with many individuals and other organizations in the process of their business operations. So therefore it has to open accounts in the names of those individuals and organizations. These accounts are known as personal accounts. Business organizations deal with many individuals and other organizations in the process of their business operations now. So they have to open accounts in the names of those individuals and organizations. So the types of accounts are known as personal accounts. For example, Srija account, Ravi account, and GVJC account, SBI account, like this. Srija means he is an individual. Srija means individual, no? So Srija account, they have to open their accounts in the names of those individuals, right? So they have to open the account. So Ravi account, he is an individual, so the business organization need to open the accounts. So SBI is an organization. JVJC, it is an organization. So these types of account is called personal account. So what is the principle of personal account? The personal account principle is debit is the receiver, credit is the giver. The main principle, you have to remember this principle. The basic principle of personal account is debit is the receiver and credit is the giver. Now we can continue real account. Real account, in impersonal account, as we discussed earlier, impersonal account can be divided into two parts, right? So in that impersonal account we have two accounts, real account and nominal account. So first we will see about real account. What is real account? All the accounts which record transactions related to assets are known as real account. So all the accounts which record transactions related to assets are known as real account. Goods are also treated as real account. For example, in these accounts, the transactions which record assets related transactions and goods related transactions all comes under this real account. For example, building, furniture, cash, goods, like this. Now we will go to nominal account. No, first we will see the real account principle. The principle of real account is what comes in is debit. What comes in the organization is called as debit. What goes out from the organization is credit. The principle of, you have to remember this principle, very very important. What comes in the organization is debit. What goes out from the organization is credit. The next one is nominal account. Nominal account means account that gives information related to expenditure and income, losses and profits is known as nominal account. Means it is the account which shows the information related to expenditure, income, any losses and profits. These all comes under nominal account. For example, salaries account, income, etc. So the principle of nominal account is expenses and losses is debit, income and profit is credit. Expenses and losses is debit, income and profit is credit. So we will see once again the principles of personal account, real account and nominal account, right? So we will discuss once again the types of accounts. So there are two types of accounts, that is personal and impersonal, and the impersonal account is further classified into two parts, which is real account and nominal account, right? So in personal account, the accounts of individuals and organizations are recorded, right? Like SBI account, like Ravi account, Srija account, etc. And what is real account? Real account is in which all the transactions of assets, goods, cash, etc. are recorded. Assets are like building, furniture, etc. Like this. Real account. This is called real account. And what is nominal account? In nominal account, the information of expenditure, income of organization, the expenses, the incomes, and what are the losses, what are the profits. These all types of transactions are recorded in nominal account, right? So what is the principle of personal account? So the principle of personal account is debit is the receiver, credit is the giver, right? Debit is the receiver, credit is the giver. What is the principle of real account? The principle of real account is what comes in the organization is debit. What goes out from the organization is credit. For example, goods purchase. Goods are coming in the organization, no? That will be debit. And assets sold, like furniture sold, this is goes from the organization. What goes out here? Furniture. So what goes out from the organization is called as credit. Now the nominal account. The nominal account principle is expenses and losses is debit, income and profit is credit. What are the expenses and losses incurred in the organization? That will be debited. And what are the incomes and profits and by the organization will be credited. So these are the types of accounts. 3 types of accounts: personal account, real account, and nominal account. So I hope you all have understand this concept. Thank you for watching this video.